Sarah and her husband are two teachers in Toongabby, west of Sydney. They both make about $98,000 a year and they're wondering, can they afford a house with their current situation? Today, we're going to be reviewing their budget, savings, and the local market to give them that answer. We'll be looking at how the banks actually assess your borrowing capacity, how different types of properties will actually impact this and affect the amount you can afford to buy your first home. We'll also look at how to shortlist properties and find homes that are affordable in your area. And I know the market can be a little bit crazy at the moment, but this hopefully going to step you through some of the hype and look at what's actually achievable in the current market.
Welcome to the Buying Your First Home podcast, your personal guide through the Australian housing market. Here we tackle the big questions and the small details that come up when buying your first home. From financial prep to finding the right neighbourhood, we're here to ensure that you've got all the knowledge at your fingertips. So let's take the first step towards unlocking the door to your new home.
Let's start with borrowing capacity. Borrowing capacity, also known as borrowing power, is the amount of money that a bank or lender is going to give you. Each lender is going to have their own criteria or guidelines on exactly how much they're going to lend you based on your income, your expenses, and other financial information. For the sake of today's case study, let's assume that Sarah and her partner have no existing debts, no HECS or student loans, and they have a pretty typical living expense. To find out how much you can borrow, you can use a calculator on our website, but based on their current income level, Sarah and her partner can borrow up to $984,000. That's probably around the level most online borrowing calculators would indicate. And this is where the numbers can change. So let's deep dive into this a little bit further. Now, not only can your borrowing capacity change due to your income and the amount of deposit you have, but the type of property can also impact your borrowing capacity. So if you're looking at buying a townhouse or an apartment, the strata and body corporate fees can actually reduce how much the banks are going to lend you. The big reason is these can be pretty variable. You could be buying a unit in a nice 2-story walk-up. There could be no lift, no gym, etc. And the body corporate or strata fees could be a lot cheaper than if you're buying something in a 10 or 15 tower building that has 2 lifts, a gym, and lots of facilities that need to be maintained. But for Sarah, if she was to pay $500 a month, which is pretty standard, it's about $1,500 a quarter, her borrowing capacity reduced from $984,000 to $920,000. That's a $64,000 reduction in borrowing capacity because she was looking at buying a unit. Now, the other item that will reduce your borrowing power is your liabilities. Now, I've covered this, but as a reminder, a $5,000 credit card will reduce your borrowing capacity by 4 or 5 times that limit. So potentially that $5,000 credit card will reduce your capacity by $20,000. It's a similar story if you have a HECS or a help loan. If Sarah had a HECS and her partner doesn't, their capacity would reduce by $60,000. So to put that in perspective, if Sarah had HECS, a $5,000 credit card limit, and was buying a unit with a $1,500 per quarter strata fee, their capacity would reduce hugely. It will reduce from a $984,000 limit that we started with to $840,000. That's a $144,000 reduction that these calculators don't take into account if you do have HECS, credit cards, and you're looking at buying a unit. This is where working with a mortgage broker like us at Hunter Galloway can help. We can give you your exact borrowing capacity with a free assessment. So if you need that, hit us up at huntergalloway.com.au. But back to Sarah and her partner. Now we know it's possible for them to borrow $984,000 on a home, or if they're paying $1,500 a quarter, they obviously don't have HECS and credit card like I mentioned earlier. So that means they could borrow $920,000. Cool. So that's their borrowing capacity. Can they go out and buy a home for $920,000? Unfortunately not. The bank's only going to lend you this money if you have a deposit or you've got access to a guarantor that can help with covering these costs. Sarah and her partner don't have any family that can help out, so they're on their own. In that case, we need to have a look at the deposit amount. And when I speak about deposit amount, I'm speaking about all the costs. So that's the bank deposit, the stamp duty, government costs, and solicitor fees. But let's start with the bank deposit. Besides your income, lenders will also look at the loan to value ratio, also known as LVR. Essentially, the LVR is the loan amount divided by the value of the property that you're buying. So for example, if you're buying a home worth $800,000 and you have an $80,000 deposit, then your LVR is 90%. If your LVR is over 95%, you may not be able to get a loan because it's considered too high risk. If your LVR on the loan is between 80 to 95%, then the lender might require you to get lender's mortgage insurance. I say might because there are some cases where you can get this LMI waived. Some professions get special lender's mortgage insurance waivers, but unfortunately, teachers are not one of these. The good news is there is something else that can help, the First Home Guarantee Scheme. Under the scheme, the government will guarantee your loan for up to 95% LVR, which means you don't need to pay lender's mortgage insurance. There are certain conditions you need to satisfy in order to qualify for this scheme. Sarah and her partner will qualify as long as their taxable income combined wasn't over $200,000 a year. In addition to the minimum 5% deposit, you need to cover costs like stamp duty, solicitor fees, and government fees. Some states will waive stamp duty and give discounts up to certain amounts. In Sydney, for Sarah, the stamp duty is only waived on homes or units up to $800,000. So if they want to go higher, then they're going to have to pay some stamp duty. We have a calculator on on our website, I'll include a link below for you to play around and understand how much the stamp duty cost is going to be in your state. So let's have a look and combine all these factors. Based on their income, they could borrow up to $920,000 on a unit with strata, but they want to avoid lender's mortgage insurance and stick with the government first home guarantee scheme. So in Sydney, they need to keep their purchase price under $900,000. Using the government scheme, they need a minimum 5% deposit plus another $23,000 in government fees, costs, and charges. So the minimum deposit on a $900,000 home in Sydney using the government scheme is around $68,000. That's $45,000 for their 5% deposit and $23,000 for stamp duty and other costs. So overall, Sarah and her partner will be looking at spending up to $900,000 on a home, which leads us to the next question. Are there any houses in Sydney within the budget? On first glance, it could be pretty discouraging. Sydney's median house price is around $1.6 million. But luckily, the Sydney market is pretty diverse, and depending on the location and property type, there could be options. And the good news is there are some suburbs where you can buy a home for under $900,000. So you can go on realestate.com.au, search either a specific map area or for the suburbs. You can search house, you can put your maximum purchase price, the sold date within the last 3 months, and any other specifics if you want swimming pool or whatever else there. And then you can search for specific properties and areas. So around Toongabby, where these guys are, there's not lots of options, unfortunately. But if you go a little bit further west to Blacktown and further along, there's definitely homes available. It's probably more of a townhouse for up to $900,000, potentially under. So it is possible. And potentially you might just need to look further afield. But it can give you a bit of hope and give you a bit of understanding on what you can buy for what you can afford. Sydney's property market is as diverse as its landscape, with prices varying dramatically from suburb to suburb. If you're willing to look beyond the inner city areas, more affordable areas can be found. Suburbs in Greater Western Sydney, for example, offer more bang for your buck, allowing buyers like Sarah and her partner to get more space for your dollar. If Sarah and her partner were willing to buy an apartment instead of a house, they have even more options in some of those closer suburbs closer to Toongabby and home. It just comes down to deciding what's important for you. Consider the differences for you personally between a compact apartment in the inner city compared to a spacious home in the further suburbs. In places like Penrith and Campbelltown, their budget could secure a comfortable home, whereas close to the city, they're probably going to be looking for a smaller apartment or townhouse. Either way, the good news is buying a home in Sydney for 2 teachers is definitely possible. So what are their best next steps? I'd be talking to a mortgage broker. Finding the right loan with the right lender is very important. Interest rates, loan terms, loan types, and repayments often vary widely between lenders, and there are only a limited number of lenders that can offer the first home guarantee scheme. Mortgage brokers like us don't charge any fees, and we can help speed up the process to help you get a loan faster. More importantly, a broker will help secure you a pre-approval and a government guarantee spot to help you start looking in the market. Pre-approvals give you a concrete budget for your house hunting, and it shows real estate agents and sellers that you're serious as a buyer. In the current market too, it allows you to move quickly as soon as you find the right home. Once you do find the right home that fits your needs and budgets, it's about making an offer, negotiating, and securing the home. We've got a bunch of other videos on our channel that help step you through this process. So wrapping this all up, buying a home for 2 teachers in Sydney is definitely possible. With the income and deposit, they could afford to buy a home for up to $900,000, and there's lots of options available west of Sydney. If you're in a similar position and you'd like some help with your finances, reach out to us at Hunter Galloway. We can give you a free assessment of your finances and let you know if you're ready to buy. If you are ready to buy, we can help with your pre-approval and all the next steps from there, including obtaining your first home guarantee spot. So give us a call on 1300 088 065 or hit us up at huntergalloway.com.au. Until next time, I'll see you guys.